In this video, we'll breaking down candle range theory. It's a way of reading market's intent through liquidity sweeps and false breakouts. I'll show you the exact 3 candlestick model I use to pass challenges and trade live, so you can finally stop guessing and start passing. What exactly is CRT? It's a concept that focuses on the price range from the high to the low of the same candlestick. The logic here is simple. Each candlestick is a trading range where the price is fluctuated during a specific period. If you break it down on a lower time frame, you will see that this candlestick will represent a trend or, for example, a flat range. The extreme points of this candlestick attract liquidity. Buy or sell orders accumulated over the previous period, be it an hour, a day, or a minute. And now we will figure out how to use this concept to find high probability setups. The simplest and most effective model consists of 3 candlesticks. The first candlestick sets the range, the second candlestick removes the liquidity, and the third candlestick determines our entry point. Now, let's break down the first candlestick step by step. As I already said, the high and low of this candlestick are liquidity zones that subsequent candlestick will use as targets. We will use the daily time frame as our basis. The high and low will be strongest zones that the price will aim for later. Thus, even without moving down to a lower time frame, we can determine where our targets are located. The upper liquidity level is called Candle Range High, or CRH, and the lower level is called Candle Range Low, or CRL. This theory works on absolutely all time frames because the market is fractal. But there are certain nuances here that we will discuss in this video. If the second candlestick removes the liquidity and closes below the range, leaving a candlestick that looks like a pin bar or simply has a long tail, then there is a high probability that the next target will be the low of the first candlestick. In other words, this is a sweep of the upper boundary of the range, and the price's target becomes the opposite boundary of the range. However, if the second candlestick closes above the range of the first candlestick, then the potential setup becomes invalid and the market will most likely continue its upward movement. Nevertheless, if all the criteria are met and the second candlestick closes below the range, then we can consider the third candlestick as a potential short setup, with targets at breaking the low of the first candlestick. This is the general logic of how this concept works. Now let's look at its application with practical examples. Question number 1. Which candlestick to choose for analysis? Most traders use New York session to trade, and the most popular approach among them is to focus on the hourly candlestick right before the New York session open. So it's a pre-market, because some very good moves often happen on the New York session. You can also do the same by applying the theory to the opening of the London session. Very often, the session opening is accompanied by manipulations with liquidity removal. This is how it works in practice. We define the range of the last hourly candlestick before the New York session open. If the price sweeps the liquidity beyond the range of its candlestick and then returns back inside, the setup is considered valid, aligning with both the principles of CRT and the natural behavior of a New York session. If you use timing correctly and manage risk wisely, an excellent trading opportunity opens up for you. The next approach is to learn how to apply CRT models together with the trend and the overall price direction. The first thing we need to do is find the market with a clearly expressed direction. Then we wait for a correction. This provides a better price and safer place for stop loss. Let's say we've identified the last impulsive move. We anticipate a correction. Since the market is in an uptrend, we mark the high and low of each bearish candlestick and observe how the next candlestick reacts. If the next candlestick closes below the range, then the setup is invalid. We do the same with each subsequent candlestick. As soon as we see a candlestick that performs a sweep and then closes back inside the range, we have found a valid setup. The simplest method is to open a trade at the current price, targeting a break of the high of the first candlestick's range. However, we can always move to a lower time frame to open a more precise trade with shorter risk. We drop down to the 5-minute or 15-minute time frame. All we need to do is wait for a fair value gap to form and place a buy order at that level. We set the stop loss below the gap. How you manage the position is up to you, but after the first candlestick's range high is taken out, it's advisable to close the position partially or fully. The next way you can use CRT to find entry points is by using the concepts of premium and discount market. Here is a clear example. After we see a strong move in one direction or another, we take the high and low of the last leg or impulse. We identify the discount market and wait for a CRT setup to form in the marked area. If the next candlestick closes above or below the previous one, the setup is considered invalid. However, if something resembling a pin bar forms and the candlestick closes inside the range of the previous candlestick, we can either open an order at the market price with the same targets, or move to a lower time frame, wait for a fair value gap to form, and open a position with the same targets of reaching the opposite boundary of the range. We place a limit order at the start of the imbalance, with the stop loss in this case placed beyond the candlestick that created this imbalance. In this approach, we combine several factors: the trend direction, the manipulation, and the discount market zone, which results in a clean, smart, and high probability setup. Now, let's break down the most common mistakes traders make when trying to trade using this concept. Mistake number 1 is trying to trade CRT inside a choppy or ranging market. CRT is a mechanical entry setup. It heavily depends on context and performs poorly where there is no clear direction. CRT works best in trading conditions where you can clearly identify impulsive and corrective waves. The second common problem is entering too early. It's not enough to simply enter a trade where the price is supposedly supposed to reverse, nor can you enter too late. The entry must be strictly timed, specifically after the full closure of the second manipulation candlestick. It is essential to wait for the candlestick to close. If you enter earlier, the price may continue its trend movement. Mistake number 3 is the lack of context. Even the most perfect setup might not work if it occurs before important news. Therefore, always check the bigger picture and consider the release of major news events. I will now show you how I use CRT. First, we are interested in the liquidity sweep. It's this zone. Accordingly, I understand that I will be looking to buy here, but I also understand that this zone likely acts as a previous indicator, so I wait for this zone to be taken out. The price takes out the zone. Now I'm interested in the last candlestick. Here you can observe the last strong combination candlesticks. What do we wait for next? We mark the high of this candlestick, we mark the low of this candlestick. We can observe that immediately after our price closes, the next candlestick breaks this very low. What can we do next? We can drop down to the 15-minute time frame, and here you have roughly the same situation. You mark the high and the low of the candlestick, you have the taken out of this level, the price closes back inside the range, and we can consider the buy trade. I entered immediately after the candlestick closed. What can be done in this case? You can enter after the next candlestick closes inside the range. That's option number 1. You can move to an even lower time frame and look for an even more precise trade. Then you have a move in the opposite direction. This one here closes inside this range. Here you can open trades. After this candlestick, you can open a trade, place a stop loss here, and the first take profit at the high of the last 15-minute candlestick. It's all quite simple. This is how it works in practice. If you still have some questions left about CRT strategy, you can watch my previous video about this strategy where I go more in depth of it. Also, subscribe to my Telegram channel, and I see you in the next one.